Hello, House Hero Clan, and welcome to Friday's edition of Real Estate Market Update. My name is Troy, and that is...
I'm Ryan.
And we're here to go over the real estate market from the prior week, what we see, all the news that's out there, which will get more local, recent news, as well as the numbers. We're going to check out July as a whole, as well as we're going to check out the last week of July going into the first couple days of August. We want to see how the home market is, how hot it is. Is it getting hotter? Is it cooling down? Is there listings are going up? Is there listings going down? We're just going to go over that information for you. Unfortunately, this week Ryan was on vacation, so he's just kind of jumping in at this right now. He's got his microphone adjusted properly, so hopefully everyone out there can hear him. That? And it's Friday night. There you go. Keep tapping it, Ryan.
Testing 1, 2.
So, Ryan, let's just start this right off, man. In the news, what have we seen the last few days?
In the news, well, driven by low inventory, the median home price in the U.S. has pushed up to a record high in July. So we've been talking about this since May. This is exactly what we're going to see in the numbers. As you know, all this data that's released, it's all trailing numbers. It's all old data in our mind. I always tell people, you want to know what's going on in the market, you ask me, because my phone's either ringing or it's not ringing. That is the biggest indicator of what's happening right now in the market. Are people interested in housing? Are listings going up? Is the demand on the buy side higher? I always can tell just on what's going on my phone and talking to other real estate professionals out there in the trenches, battling it out with us, trying to get their clients into homes and sold. And we see that this is going to go up even higher in August. So the market is hot right now. I'm trying to schedule showings for buyers, and I can't even get time slots before they're maxing out their showings. And they don't even care about getting us into the home because they know they're going to have multiple offers over asking price with no appraisal contingency. And somebody's going to bring in that appraisal shortfall to get the deal done because they're over it. They just want into a house. So, we joke about it. I was at the river a couple of days and we laugh about boats now. Like there's a COVID tax. If you're looking for an RV, they're way more than they were this time last year. If you're looking for a boat, way more than this time last year. Everything's got this COVID tax of what people want right now. And homes are no different. You are paying an absolute premium. And what's crazy is I don't think there's nothing that we can see on the radar that's going to diminish that. We were already leading into this year with a shortage of inventory. We had 3.8, like Troy says, at the beginning of the year, we had a 3.3 million housing shortage from Freddie Mac. And then you roll into, I think it was March or April, and they released the updated info and it was 3.8 million home shortage. And when you've got a shortage like that, this is exactly what you're going to see. You're going to see this demand and you're going to see medium price homes go up.
Let me dissect the numbers real quick. First of all, when Ryan mentions COVID tax, it's just a term. It's not actually a tax. I want to say that. So I know some people are out there, okay, what's my COVID tax,
It's a COVID premium on things that people are buying a lot of right now.
So what's really the numbers here is that nationwide, the average home was sold for $349,000. All-time high. Nothing comes close. But more importantly, when you look at it, month over month, year over year. So let's call it July 2019 to July 2020. The market has gone up nationwide on average 8.5%. Think about that. Your home value went up 8.5% if you bought it a year ago. All you did was make your 12 monthly payments and you kept your job. That's it. Nothing else changed. And that average is $27,000 in home equity. Now, of course, we go back to nationwide. Let's take California numbers, right? Well, as we see the median home prices in LA and Orange County are toppled over 700,000, and then you look at the Inland Empire's right around 450. I mean, if you take that in consideration, you're looking at a bump of another, average, let's call it average equity in the Inland Empire is somewhere about $38,000 in home equity in 12 months. Now, we're just saying that's just the average 8.5%. Me and Ryan definitely consider that we're probably at the 12 to 13, 14% in those areas. Yeah. And then if you definitely go into Orange County and LA County, your $700,000 purchase average home price, you just walked up to what, $62,000 in equity again in 12 months.
Yeah.
These are big numbers. And like Ryan just said, I mean, we're just rolling right into August. We don't see any relief in sight on this. You know, I did, you know, have some type of prediction that, you know, we were going to kind of hit it like a flat season here in the last 3 months, but that was kind of a prediction in the respect that we're having kids go back to school. If you don't have kids go back to school, how easy is it to move from one school district to the next? So if I take one more step back from that, the hot buying season is all around the school season, right? So when the school season ends, typically the end of August and into September, right?
I mean, starts.
School starts, and that's the buying season ends. The school starts. Now we've just erased that line, right? Because they're not going actually to school. So you can actually transfer, or you could actually, I mean, at this point, Ryan, you could actually move from one city to the next, one state to the next.
And I've had it.
How will they even know that you even
worried about? They were worried about, oh, we're gonna have to re-enroll. We're moved now, and they're just keeping their kids in the same classes to finish out school because they're like, hey, it's most likely going to be online. The
Zoom.
School district hasn't, you know, questioned us on anything, and we're just going to keep all the kids in their existing schools right now.
Right.
I'm like, and you're right. It's a lot of Zoom, and it's just a very interesting time. And I told people normally that's, like you said, that's the market starts slowing down into September, and then people are like, they're kind of back into their normal routine, and then all of a sudden it's Halloween, and then you from right after that you start into all the holidays, and people aren't showing. They're not as interested in that. They've got all kinds of different things that are soaking up their time and distracting them. But nowadays, you know, you have people working from home, and they've still got these same pain points of, hey, you know, we can't have two people sharing the kitchen table doing Zoom calls to their, you know, on work at the same time with the kids running around naked behind us. Like, we got to get a home office. So you've got these same buyers now that it doesn't matter when September hits, they're still going to need a home. They're still out there looking for a home. October rolls through. We're going to have the same people that are still looking for homes. And it's going to be very, very interesting to see what the seasonality changes look like this year in real estate. I really think it's going to be a whole new situation where the demand's going to stay hot and inventory is going to just trickle in, you know, like it has been, you know, a little drip in the faucet, and, you know, nothing's really going to change. So, and this is an interesting number because if you guys follow our Instagram, if you don't, please do go on Instagram, follow us. Same thing, like and subscribe to us on YouTube. But on Instagram, we had an infographic that the annual increase in equity that people got last year was $9,600. So if you're a homeowner, you made $9,600 just by owning your home last year. But that was old trailing data. This number right here showing what the median price is right now shows us our gain right now on the U.S. median home price is $27,000. That's triple what we had from that infographic. And that just blows my mind. And like Troy mentioned, I expect it when they look at August, it's going to be even higher jump, you know, that year over year when we hit that month. So.
And why, Ryan? Next slide.
All kinds of reasons, but this is a big driving factor. Just the affordability with rates as low as they are. I mean, we're smashing records over here. And again, we hit, you know, Fannie Mae, Freddie Mac, their average U.S. rate for a 30-year fixed mortgage they were reporting was 2.88% this week. The 15 years, 2.44. So I'm like, all right, find me a property. I need to go refi it. You know,
right,
like,
exactly. I mean, and the previous low was at 2.98. So it was the first time it was sub 3. And then a week and a half, 2 weeks later, now you're going 2.88. There's a lot of factors out there that's keeping the rates low. And of course, one of them is the Fed had confirmed again twice now this year that they won't be raising rates, you know, through 2021, which is really helping the market out right now in the situation that we're in. But yeah, I mean, this is historic. We're at historic times right now in a lot of different categories, you know, in society as well as in the real estate market.
Yep, absolutely. If you guys are, you know, thinking about buying a home, you know, have questions, you know, reach out to us. We'd love to answer any questions. Plus, if you message us on Facebook, we'll go ahead and shoot you over this free guide. It's just things to consider when buying a home. We also have ultimate or a complete home buyer's guide that's going to be dropping here any week. So that is in much more detail if you really want to geek out over it and just split every hair on what's going on in a home transaction. From that aspect, you might as well become a real estate agent once you read that thing.
Well, we geeked out on it, and we pulled our hair out of every bit of it as well. So now we're handing it off to our assistant. Actually, she's not our assistant, she's our admin, Heather, and
finish it all up.
She's going to finish it all up for us.
She's going to take it home so you guys can figure out everything about buying a home.
Yes.
So, all right, let's look at the numbers. Drill them down for us here, Troy. What do we got?
Well, first of all, Foreclosure Weekly. And as me and Ryan in the last 3 weeks have laughed, like we've never seen these numbers before. Well, let's just go ahead and say we've never seen this number either. Yeah. This week we went from a 185 down to 170. We had actually thought that 185 was kind of the line in which we weren't going to sink any lower. But this really just shows you, the forbearances, that the federal government has put into place, and the cooperation of Fannie, Freddie, and a lot of the mortgage companies, they have absolutely kept homes off of the market and kept American, homeowners in their homes, and kept it that way.
And we expect that to be the new norm. And if they do need to get out of their house, they have equity. I mean, look at that graph. If you've been in your home 12 months and you've got the median, price point home in the US, you've got $27,000 right there. That's 8.5%. It is not going to cost you 8.5% to sell your home. No. So if you didn't put too many holes in the wall,
well, hold on.
You didn't drive the car.
iBuyer, it'll cost you 8.5%.
Yeah, well, yeah, exactly. But that's it, right? So if you can get your local real estate professional who knows what they're doing, and you should be able to get out of that home and at least break even if you've been there 12 months. That's what that U.S. median home price data is showing us. Now, obviously, we understand there's, going to be all sorts of, statistical outliers and stuff like that. But on average, that's the situation we have out there. And that's why we don't expect a lot of foreclosures to come through. I talk to small business owners regularly. I have a buddy who's a teacher. He just took a job. He's like, well, I'm doing some Zoom classes here or there, waiting for the school season to start or not. So he picked up a job at the local deli, where they serve beer, because he just wanted to hang out and talk to people because he was bored being at home. And the owner couldn't find anybody to work that entry-level minimum wage job because they were all making more on unemployment. So again, when you see these unemployment numbers, there are some people that are really out of work, and it hurts, especially if it's your career and it's a career that's going to take a while to bounce back. Like, we feel your pain. We understand. Like, we're not trying to minimize anything like that. But you have to remember the vast majority of the unemployed out there, it's entry level. You've got kids still at home. You've got, people that, they're not home buyers. They're not even starting their career jobs yet. It's service industry. You've got a lot of people, in restaurants, bars, things like that. And the work actually there if they want it. But the real question is, do they want it? And when you look at some of these unemployment numbers, I feel like there's a good 25% that could be employed if they want to right off the top, and in the jobs that they had. And then you've got the rest out there, and it's okay, let's figure out, like, is your career coming back? Like, is that job going to come back? Can you go find a job in that same career when it does bounce back? And you're going to have some of those painful transitions and things like that. But all in all, the majority of people out there who are unemployed, I feel like there's going to be some soft landings, and there's some jobs out there for them. And again, if you're in a career job, let's say it's a couple or dual income of some sort, both people lose a career job. If you've been in your home the last 12 months, you can get out of it without getting foreclosed on. Right. That's what we're talking about here.
Yeah. And today, which is the 5th or 6th? 7th. Wow. August 7th. They came out with last month's numbers on unemployment, and the U.S. market gained 1.8 million jobs. So even during when everyone's shutting down again, we still gained those jobs back. So There's been a gain last several months. We keep clawing down to that 10% rate unemployment. Let's go to the next one, Ryan. Let's go hit the counties and see what's happening here.
And there we go. LA,
the stunner. So something that we have not seen at all is all 4 counties here in Southern California have actually had more solds than actives now. So we trailed a little bit here on Los Angeles County. It was the only county holding out with more actives than solds on a week-to-week basis. Now, this is the week of July 27th to August 2nd. So it's a Monday through a Sunday. And these are the numbers. One encouraging thing I saw here on LA County is that the active numbers bumped up. We were really scared.
We need
that if that trend keeps going down and the trend of solds and pendings going up, we are going to see just a complete housing shortage, and we're going to see an enormous amount of homes go for way over what they're really worth. We're going to see these big jumps in prices. And so we were happy to see that there was a gain in actives. The pendings are kind of all steady and near the tops. And then the solds went through the roof. Of course, pendings are all the trailing numbers, typically 4 weeks out, 4 to 6 weeks out. So now we're seeing that as those homes are being sold. And
that was a really big jump up there because you figure trailing, it'd be maybe closer to 1,200 still. And I mean, it jumped to 1,500 sold.
Well, I think, Ryan, what you run into, and you can hit the next
sales.
You can hit the next. What we hit into is that all the lenders got overwhelmed, and so they all got backed up, and now they're finally getting it all through the pipe, right?
Just I know that's happening on a lot of our files,
right?
For sure.
So I think that's what happened. They just got clogged, and now you call Roto-Rooter or Mortgage Rooter, and then unclogged it to a certain degree. And that's where we see all those.
No, you're right. And I know I'm working with clients now because they've been in the queue so long. I said, hey, to get your offer accepted, to be competitive when we're putting an offer, you have to be fully underwritten approved. So get all of your information. Let's try and slip it in and get an underwriter to look at that file and have that underwriter approve you 100%. So that all that they're waiting on from you is an address and an appraisal. And once they have that, you're good to go. And because of that, I know I've got a couple clients now. We're writing 15-day offers. If you guys are out there, you're constantly getting your offers rejected. That's something you need to talk about. See if you can get that file, your loan file, in front of an underwriter to go through underwriting and have them kick out all those conditions that are going to be needed and get those all back. So you've already cut off a week to 2 weeks off of the time of that loan. So now when you go out, you can compete with people that might be putting more down or might be cash offers because you can close just as quick as them. And then it just comes down to maybe some of the other terms, price, a nice cover letter or whatever. But yeah, so make sure you guys are doing out there. And I think that's why some of these solds are upping because I see a lot more shorter escrows again.
All right. Let's go to Riverside County. So this is the stunning development. I mean, across all 4 counties, we're seeing a big jump in solds, and again, we all feel that's because of mortgage clog. But it's almost stunning. It's almost double of the actives. That's a stunning number. And
that's scary. I mean, we're really going to be selling out of these entry-level homes because you got to remember, majority of Riverside and San Bernardino County, it's that entry-level price point. I mean, when you're selling, last week you had 2 homes close escrow for every one that went on the market.
Yeah, the affordability factor is starting to go down and down and down.
Yeah.
And then let's go take San Bernardino. I mean,
San Bernardino, same thing.
I mean, look, the pendings are ridiculous. Mm-hmm. The solds are ridiculous. And the actives, and again, we're definitely encouraged by the small bump in actives, but it's not nearly where we need it to be. We actually would love to have double those actives. And I think that we'd have a hot market for 6 months, and then a lot of the buyers would get in homes.
And that's it. All of these numbers for all these counties, they could double. And there is enough demand to soak up all of those lists.
Oh, easy.
When we've got offers in, we're one of 30, we're one of 20, we're one of 14. And you're laughing because you're like, I'm one of 14 offers, but you only showed that home for 5 hours on a Saturday in 15 to 20 minute increments. That's nuts, Yeah. And so, that some of those people would have potentially been willing to write an offer, but they knew it was so nuts that they just didn't even write it.
Yeah.
So
and that brings me to one other question here. Actually, one other statement. On last Friday night, I had a client called me up and said, "Hey, can we look at this home?" Actually, 3 or 4 homes. One of those homes on that list that they had, it said, okay, we're showing between 1 and 3 on Saturday. And I'm like, okay, I'll just do it on Sunday then, right? I'm assuming that's it. So I hit him up. Let's go look at it Sunday. He goes, no, Troy. We're really only showing 1 to 3, 2 hours, and that's it. We're not showing that house any other time. And in that text, he wrote, I have 30 showings booked. And I said, okay. He goes, just if you can, make it during that time. I'm saying, well, hold on. How, when the COVID, we're supposed to be in only one person in a house at a time, how did you book 30 different groups of people, not people, groups of people.
Every 4 minutes.
And it's every 4 minutes, right? That's my client said when I showed him that text. And I asked, that's my text back. How are you able to show the house for 2 hours to 30 different groups of people? And his response was, good question. And that was it. I think I texted out to a few other realtor friends.
You gotta send that to our IG.
Oh my gosh,
awesome.
Good question. I'm like, are you kidding me, man?
And that's the stuff we see out there. Same thing. I had a client, he liked a couple homes this week, trying to set them up. I have to show every day for the next 3 days different properties because of what they're willing to show.
Yeah.
So it's just, you've got to be committed as a buyer to go out there whenever the seller is willing to show it.
Yeah.
And if you see a property hit the market that you're interested in, got to let your agent know and get on them right away to schedule an appointment, because they completely book out fast. And they just don't care about getting you in because they know you're just going to be another paper offer that's probably going to be number 3 or 4. So you got to fight to get in, and then you got to fight to be that number 1 offer. So, if you got questions on how to be that, definitely check us out, on our Tuesday live streams that we're constantly going through all of the tips and tricks you need to get your offer accepted. And then we're also going through our home buyer's guide where we detail all of what you need to know to be able to be out there and be competitive in the market. So here we are, this median home prices, Troy. This is one of the ones I was kind of talking about. You see this kind of flat line here in Riverside, even though you see the numbers going off the charts. I know I'm working with a client in San Bernardino is obviously going up fairly consistently. I'm dealing with a client, and in the price point they're at, they're right in that 5.25, 535 is like their max. Well, their max loan amount's 510 for conforming in those counties. And because of that, you've got a lot of properties that are kind of sitting in that price point, and it's just a little hard for them to jump up. I think that if conforming loan limits have gone up, that in those areas, we'd see an even bigger price jump, because now they could come in with just their 5, 10, 20% down and not have to worry about coming in with whatever their down payment is and cover the gap over the 5, 10 all the way up to whatever the appraisal shortfall is. Because a lot of these homes I'm seeing, the appraisals are coming in short. They're coming in 10, 15, 20, $30,000 short. And those buyers are making up that difference because they know if they don't, somebody else is going to make up that difference. And now that's the new comp in the neighborhood. And the next one that gets listed is going to be listed at that price or above. And even if it gets listed at that price, it's going to go up from there, because everybody who is left at the altar isn't going to get stood up again. And they're going to come in and they're going to go find that money to make up that gap. So
yeah, I mean, you make it's a good point we had off camera before we even started this. If you really look at FHA loan limits in the Inland Empire and then conventional loan limits, that's the only reason why we haven't seen this just literally slope straight up.
Yeah.
Because if you can actually, if it wasn't capped, and you would just see these numbers crazy going up, because these homes are just as nice and are just as desirable especially off the 210. Yep. Right. In San Bernardino.
What were you saying? So, like in this case, San Bernardino FHA loan limit,
450. Well, so with everything being said, with putting down your 3.5%, it's 458, 750, and then obviously in conventional, looking at what 510 is the actual
400,
loan.
yeah, actual loan amount.
Right.
So here you're looking at this, and which puts you out, like you said, if you're doing like a 5% down or whatever. So, so when you're looking at some of these, a median price is half the homes sold are under this price and the other half are over this price. And I really feel that FHA loan limits and conforming loan limits are keeping these numbers low.
Yeah, well, they're just holding them down for the moment. And you obviously if we look at the blue, there is San Bernardino County, but you do have a lot of desert cities there. In San Bernardino County, you obviously have the city of San Bernardino, which isn't has.
I mean,
has
it
a
goes
lot
all
of
the way out
areas
to
that are-
you got Needle all the way out to Needles and Blythe. I mean, you
Right.
got Barstow, you got all that stuff considered in there, keeping that
Right.
number
If you
low.
were just taking off the 60, the 10, and the 210, these numbers would be significantly different.
way higher. And that's the problem with a county like that, is it's just bifurcated. You got some higher end stuff and some very, very low end. Hard to have one FHA loan limit.
Well,
So, all right. Well, thank you guys for joining us. Go ahead, Troy.
Well, I was just gonna say, Ryan, what is our YouTube? This is gonna go on YouTube. We post all of our information, our lives on YouTube. We post our weekly market update on YouTube. Definitely check us out there. What is our YouTube?
We're at the YouTube. You're just gonna have to search for the House Heroes for now. I know on we've got the link actually right here in our comments section, not comments, but the info section on our live stream right now, or our Facebook drop. We've got our link right here to our YouTube. I don't know it off the top of my head. I know it's a bit.ly link. So
Okay, well, very awesome. Thank you guys. I know it's a Friday night and the weekend. You have plenty of other things to do. Thank you for joining us and getting some of the numbers and information. If you like to comment, definitely leave it there. We're more than happy to respond back. We're open to opinions and anything you have to say. We're definitely open to it. And otherwise, have a fantastic weekend. Stay safe. It's going to be in the 90s, I guess. And enjoy.
take care. Peace.